Okay, we're going to go ahead and get started. I just want to welcome everybody to the first session in the Ask a Financial Professional webinar series. And this webinar is presented by Cal State Fullerton Extension and International Programs. And my name is Lynn Stewart. I'm the Director of Economic and Workforce Development at Cal State Fullerton in Extension and International Programs. And I will be the moderator today. Extension and International Programs at CSUF creates and administers non-state funded programs for every stage of life. And that means we have Titan Youth programs, we have professional development and workforce relevant training to support the local talent and the needs in the area. We offer programs in human resource management, digital marketing, fiduciary management, just to name a few. We also offer community programs like workshops and this webinar. And in fact, our speaker teaches one of those workshops called Designing Your Financial Life. And so before we introduce him, I wanted to go ahead and go over some housekeeping items. This webinar is being recorded, and I'm going to start recording in just a moment. Also, you are all on mute. We want to provide the best audio experience for everybody, so we'll keep you on mute. And the format for today's presentation is the speaker's going to go ahead and go over some topics in general, and then we'll open up the floor for Q&A. And since we have the Q&A function, we ask that you please post your questions in the Q&A area, and that bar should be located at the bottom of your screen. And before we get into it, I wanted to actually launch a quick poll first. So let me stop sharing my screen for just a moment. And I would like to, let's see, launch this poll, and all the answers are anonymous. And so if you can go ahead and enter your selection. Okay, I think we're going to end the poll. Looks like we have most respondents, and I will go ahead and share the results. We have a bit of a mix, so it looks like we have the majority of working professionals with us, and some not currently working, and some college students. So thank you for participating. In that, we'll be providing a couple other questions later on. And I will go back to get our presentation started in just a moment, but want to hit record first. Let's see, are we recording? It looks like we are. Okay. Then let's see, go back to that. And we are lucky enough now to have a speaker with us who is a professional in the area of finance. And so John Nguyen is a proud alumnus of Cal State Fullerton. He is the founder and CEO of his financial planning group located in Placentia. He is an enrolled agent and a certified financial planner. He has been in active practice since 2005 and holds numerous licenses, registrations, and certifications. John also teaches our Designing Your Financial Life workshop, as I mentioned earlier. John is very active in the Orange County community, both personally and professionally. He believes that everyone deserves financial education opportunities that are objective, unbiased, and come with no obligations. And I apologize, I forgot to advance the slides, and there's Cal State Fullerton. And I had already mentioned the programs we offer. And here's our wonderful speaker with his bio. And with that, I'm going to go ahead and turn it over to John. And so John, if you want to pick up the screen share.
I will do that. Hope everyone is well. Beautiful day. So let me see here. I am going to do this. So hi, everybody. I'm going to kind of end my screen share 1 second. Let's do this. Sorry, 1 second. All right. And hopefully there's no background noise, right? Because we have somebody that's that's cutting our building grass. That's kind of around me. I'm in our one of our conference rooms. We have two, so I'm kind of right on the corner. So I think they'll be done soon. So, all right. So let's get started. Let me get my screen up. So this is my background. Again, I got involved in the financial services industry purely for personal education. So it wasn't for any other reason than just that, is that I wanted, as I came here as an immigrant, our family, we were night janitors. We were doing any job possible to kind of get our start in this great country. And I saw my siblings working, and and you would watch movies of business people, et cetera, and you watch the news and they talk about finance, et cetera, and I just wanted to learn about finance. So I started very early. I think right after, or I think even in high school, I was very, very interested. And then in 2005 is when I got my licenses, and then that started my career. But again, I got, it was for selfish reason. I just wanted an education, and then it became a career fairly quickly, because as I was helping my family, I realized, gee, my family and myself, there's other people that, we're basically in the same boat, and we're starting to, accumulate and save our money. And so what do we do with it, right? And so that's how it all started. And then we had a MetLife insurance agent that helped our family to get life insurance, and that was also my first exposure to a financial professional. So that's how it all started. So this is this is a little bit about my background. So I'm the more handsome one, if you're curious which one's me. So actually, this is this is me, and this is my younger brother. This is our home. We live in a city called Tay Ninh in Vietnam. And that is our house. We live in this house, and this kind of extended house is where my dad did acupuncture. So it was something he did as kind of, it's his business, I guess you can say. Yeah, you can tell by our roof. This is mud, I believe. And yeah, and still to date, there's no paved road. It's still very much dirt. And we don't, by the way, we don't dress normally. Like, this is our best clothes. This was a picture that was taken, I think, a week before we left, before we immigrated here to the United States. So my parents want us to wear our best clothes so we can take pictures for good memory. Speaking of my parents, these are the love of my life, all of them here, including, obviously my wife, and this is my daughter, our first, and then we had our that's her. And then we had our son, that's my daughter, and then this is this is him when we shaved. He was born with a lot of hair, so we had to anyways, to keep shaving his head. And so my dad just turned 81 years young, I guess. I like to say he's 35 with 51 years of experience or something like that in life. So he's still very healthy and in great spirit. He does have Parkinson's, so it's a little bit slow. They live with us, and I can't imagine any other way. So love him very much. And I bring this up because really, the subject of personal finance is, if there's one thing you can take from it, is it's more personal than it is about the finances. I think we get caught in the nuances of the word finance, right? Money and just everything surrounding money and the responsibility and opportunities that come with it, right? But again, it's personal, right? And personally speaking, it's our values that drive our financial decisions. It's not our financial decisions that drive our values. And so the class that I put together with University Extension, Designing Your Financial Life, is around that. It's value-based decision making. And so if we keep perspective of our personal values and what's important, personal finance becomes something that's not scary. It's just something that we do every day, right? So, all right, so let's continue. So there are three areas. So being that this is a series, we need to start with something. So, and we'll add on more topics later, but this is a good starting point for us, is to talk about three simple areas that we need to focus on for us to immediately better our finances. And by the way, these are three things we need to always do. And in my experience, since what I do with my personal finances and as well as my client, all of, everything comes back to these three areas. And so it's basic, it's simple, but it's where people come into trouble. So, or when they have personal financial troubles, it's around these three areas. So let's kind of kick things off. And so I got a question for the audience, and it's something for you guys to think about. And then I'll give you the answer. So the first question is this: if the number one cause of health problems in the United States can be traced back to dieting and nutrition, when it comes to most people's personal financial problems, what is it, right? So when it comes to health problems, it's all attributed to dieting and nutrition, right? Something that I can tell you I've gained some weight because I haven't been exercising as much as, or out and about as much as I have, and hopefully we're eating well. Well, like today I had an In-N-Out burger because I had a craving for it, but that's probably not the best in dieting and nutrition. But anyway, but when it comes to personal finance, what is it, right? What are two simple things that attributes to our financial problems? So I guess I'll let you ponder on that. And okay, so let me give you the answer. And based on my personal experience working with clients and myself as well too, and it's simply saving and budgeting, right? If you're not able to properly budget and save, and that is very simple, I know, that is where all problems starts, right? If it's not that we don't know what we don't know, but if we don't know our cash flow, right? And how, what our income and our expenses, then it's really hard for everything else, right? So, and we'll talk about some tools and resources that will be available to help with that. So let's continue with the second question, and this is really important. This goes back to really everything, and to keep things into perspective, is that so the question is, what are the two main currencies that we use, trade, give, save, spend, invest, and even lose each day? Right? It makes up our capitalistic economy. It's how we value everything. So think about that. What are the two main currencies that we use every day, right? That we trade, that we spend, that we invest. That basically that's everything, right? For example, everybody that is that's joining us today, right? You're investing that one of those two currencies, right? And so what are they? Well, it's something I've learned, and it's made a great personal impact on my life and the way I make my decisions, both personally and in business and everything I do. And it's learning how to value the currency of time and money, right? So that's it. I know in the years, like I've added like health, right? But that's a whole other area. But let's keep to just time and money, right? So in our economy, that's what drives everything, right? That makes up our economy is our time and our money. But I think where we make the mistake and we start to have personal financial challenges or problems or whatever you want to see it is misunderstanding for time being equal to money or money equals time, right? Sometimes it does and sometimes it isn't. Like, for example, I have two kids, and so and obviously married with my wife, and so I can't tell my family and say, you know what, I can't spend time with you, but what I'll do is I'll just give you a lot of money, because I'm thinking, gee, time equals money, right? So if I give them money, that should be sufficient. Well, it isn't, and so and I can tell you, my daughter can care less, and so she's now 3.5 years old. She wants my time, and so right, and that's the most precious commodity. And sometimes we forget the trade-off where we can make more money, but it's going to cause us a lot more time and maybe misery and some health issues, then it's probably not worth it, right? Or it's going to cause us other problems. But it's just something for us to keep in mind and be mindful of, those two currencies that we have every day, right? So, when I was younger, obviously I don't have money, and so what I had was time. And so I'd learned from my dad is to make sure that I invest that as wisely as possible and learn. And he said, like, any experience I would go through personally, he said, just don't let it go to waste, right? Make sure you learn something from it, either good or bad. And, it goes back to the saying, don't let a good crisis go to waste. And right now, I guess you can call it that we're in a financial crisis. I just don't like that word because I don't think it's the way I don't see it as a quote unquote crisis, but we are in an uncertain time, um, and I guess it's a good time for us to be reflective, but also with the mindset of being grateful, right? And so it's something that we voluntarily, put on ourselves to self-quarantine and to keep our society healthy. And so, but we all have to adjust. But like, unlike 2008, and by the way, I went through 2008 crisis, right? That was the housing and financial crisis. And one thing that, I went through that. And one thing I always regretted is that I had a lot of time, of course, but I didn't have money. I didn't have the financial resources that I have today to take advantage of opportunities. And so I've always learned to be a good saver, first and foremost, and we'll talk about that. And now that this has happened, I'm in a great position to take advantage of opportunities, and that can be a whole other webinar series. But I'm very grateful. I mean, it's I can tell you personally, I'm not impacted at all. And there are areas of my finances that are doing very well, and of course, I have some areas that are not as well too. But overall, I'm net positive. And so I'm very, very grateful. But it comes back to, I guess, because I live within my means, and I tell my clients too, I save about 70% of my income, if you can believe that. So it's just a habit that I have, and we'll go into that topic later. But that's how I practice. So I guess I live very much within my means. So anyway, so the three areas that we're going to touch on today or talk about is 1, manage; 2, save; and 3, grow, right? And it's in this order. And so it's really important to first focus on just managing and having a good handle of our finances. Like in this uncertain time, again, there's always certain time or uncertain. There are always things that we can control, and there's things that we cannot control, right? And so starting with the things we can control are the way we spend and the way we save, right? And the way we manage what we have. So that we can do. We don't know what our government is going to tell us next or to do, and etc. We don't have control over those things, right? So, but we do have control over a lot of things, right? That can make an immediate difference. And by the way, just from a behavioral perspective or behavioral finance perspective as well too, is just basic psychology. Whatever we focus on expands, right? If we're focusing on, oh my God, how the world is falling apart and woe's me, woe's that, or whatever it is, guess what? That's the only thing that we see, and that's the only thing that we think about. And so just be mindful of that, is whatever we focus on expands, right? So, and another thing I've learned is that simply put, like the inverse relationship with high interest rates, bonds and interest rates, when interest rate goes up, bond prices goes down, etc., and vice versa. But when we're emotional, our intelligence goes down, right? So high emotion, low intelligence. So just some insight there. So when the next time you find yourself very emotional, either very good, euphoric, or very happy or very sad, it's probably not the best time to make very important financial or lifelong decisions, right? Just, all right, so let's move on. So let's talk about the subject of manage, right? So here's a question for everybody on this webinar is, how are you managing, or how am I managing my income and expenses, right? How are you managing it? Or do you use a notebook? I have clients that do that. Do you have Microsoft Excel that you keep everything on? How are you doing it, right? And is it your responsibility, or is it your spouse's, or is it a shared responsibility? What is it, right? This is a good time to have that conversation, as a family, or as a couple, or, figure that out. But how are you managing your income and your expenses, and what tools are you using to stay on top of it, right? So I know here and then, like I would forget to, I have a corporation that I forgot to file for some reason. Then I pay a penalty for it, right? So by us not being on top of our finances, that costs us money, right? So really, really important to stay on top of our finances, to make sure our bills are paid on time, uh, so on and so forth. So the next thing to think about is, when was the last time I did an inventory or an accounting of all of my finances, right? And that's it's a simple question to ask, but I can tell you most people don't. They do not stay on top, and they do not organize, file, and put away all of uh, their financial statements, right? Their mortgage statements, or keep in one place that's easy for them to take a look at really quick and know where things are and what's happening. And by the way, just as a side story, the industry that I'm in, financial services, when I joined, like I share with everyone here, is that I wanted to learn to be better with my finances, to learn about personal finance. But really what I learned was all about selling products and services, and what products and services there are. I can tell you, I've learned to be better in my personal finances from my clients, more than really the industry. The industry is just, like what I just shared with you. And I have clients that are just amazing. They are your millionaire next door. They're very simple. They have they have some type of notebook or a filing system where they keep everything together. It's amazing. And I learned early on, that's really, what makes a person wealthy. And wealth attributes to like peace of mind, right? It gives them they don't worry so much because they really have a good control of their finances. They know where things are. And if there are issues, they know where the issues are, and they'll ask questions and they'll find solutions to address it, and they're done. And so, so the next question is to follow up to that is, have I thoroughly reviewed my financial, my insurance, and my investment statements, right? So you'd be surprised, many people don't look at these things and they're asking questions like, oh, gee, what's a great investment, John, that I can put my money in? And I would say, by the way, do you have any credit card debt, or how much is your savings account yielding you, right? And how much taxes are you paying? These basic questions, because if you can reduce taxes, if you can, let's say you have a credit card balance of 10,000 and the interest rate is, let's say 15%, that's really low. Let's say 20 more realistically. And you're trying to make money on, a $10,000 that you want to invest. That makes no sense, because your $10,000 that you're owing on that balance, it's eating you alive at 10%. So by investing, that doesn't make any sense, right? You should be paying down that debt where you're not having to lose an additional 10% on top of that $10,000 balance, right? As an example. So just something to think about. By the way, I tell a lot of my clients, really, when it comes to personal finance, you don't have to, when I work with a client, I tell them, we don't have to do anything. You don't have to do any financial products or do anything with us. All you have to, if we can show you how to manage and help you manage your finances better, you'll make more money, because you're able to save more, and therefore that nets you more. That's period, right? So anyways, we'll get into that on the next topic, but it's really important. I mean, I cannot, it just surprises me every time when clients bring in their statements and we go over with them. I know it's very elementary or basic, but you find out things where it's like, oh, that you're paying, a brokerage fee or whatever fee of 1%, and your accountant did, this, and you're also paying this fee. They weren't aware of that, and that's why your net return was a lot lower than what you were expecting. And the number that you were quoted as a gross amount, it's not the net amount. And so just basic education, right? And it's so important, and especially during this time where we have time at home, put all these things on a kitchen table or on your or a big space at home, lay it all out and go through one by one. If there are items that if you do not understand or you have questions, tag it and do what? Pick up the phone, right? Call the institution and get those questions asked, right? That's really, really important. You need and you owe it to your finances and your future, retirement and so forth, to understand these things, because they will compound over time, right? Like the fees you're paying, if they're unnecessary, right? Then you should make some changes, or there are things that are not performing, or you realize interest rates are low. Your mortgage rate is, let's say 3.75, you can refinance it as something lower, right? You should look into that, right? So there's just so many opportunities there that you can that you can look at, and it would immediately improve your finances. So, all right, let's continue. So let's talk about savings, right? So beyond managing and staying on top and knowing what you have, and making sure they're good, right? And that they still serve your financial plan and they still serve your goals. The other thing is save, right? And saving. So here's a question for the audience. And so I know this is kind of it's a hard thing. I'm not able to see you guys, but so fill in the blank here. $1 save is blank to $1 earn. So what would be in that blank, right? Just think of something and I'll give you the answer. So most people say $1 save is blank to $1 earn. They would fill in the blank equal, right? $1 save is equal to $1 earn. Or Benjamin Franklin famously said, you know, a penny save is a penny earned. Well, back then they don't have to pay taxes. And so in today's age, you know, there's taxes. So if you're in a 30% effective tax rate, right? So for you to save $1, that's equal to $1.30 that you have to earn, right? And so that is really, really important to keep in mind. And so I can tell you, I am a religious saver. It's something that I practice religiously. I will not pay full price if I can help it. I mean, there's like I would buy a gift certificate at a discount and use that gift certificate to then, you know, buy something full price, right? Or to add to that, wait for it to go on sale and use that gift certificate that I bought, or a gift card that I bought at a discount, to use that to buy something at a discount. So and then I would use a credit card with cash rebates, and I would shop online where, like, you know, there's websites like Ebates where they give me an additional cash back. Anyways, you can tell I'm pretty obsessed when it comes to finding ways to save, right? Because I know if I can save $1, my God, I don't have to earn $1.30, right? Or more, right? Depends on your tax bracket. But if people do not, I can tell you, like, anybody that are not strong or understand savings, they don't have a strong foundation to build wealth. I know it's sexy to talk about investments and this and that, and, you know, investing in Facebook, and look, it's gone up, you know, look at the past 2 days or whatever it is. That is irrelevant. I can tell you there's people that I work with that have a lot of money, or they make a lot of money, and I can tell you they lose it just as fast as they make it, or they get hit with tax bills that they didn't account for or they didn't know about, or they make terrible decisions at the way they put their money to work, where they think they're buying assets, but really they're buying liabilities. And so it's terrible. And so cannot stress enough, we got to learn how to save better, right? And so there are great tools out there to do so. And there's great blogs online that you can research that will show you how to do these things. My family, when we first immigrated here, my sister, she used, well, all of us, it took like an ESL class. It's like English language, or ES, or whatever, English, it's a second language type class. And so I think her teacher was, you know, she's a couponer, and she taught my sister how to coupon. And so my sister showed our family how to do couponing. And so that's how we learned to you know, really focus on savings. And we would buy a lot of things at a great discount, and we would buy, you know, things in like, we would have plenty of tissue paper or toilet, whatever that goes on. It's a fun thing to do. Look into that, and make a game out of it. It's a pretty cool thing if you're not familiar. And there's websites that can help you be like an amazing coupon king or queen. And I think there's even reality shows too. So you know, try that as a streaming entertainment. Anyway, so yeah, going back, it's really important to optimize your income and expenses and find ways to pay yourself, right? So instead of using the word save, replace that word with paying yourself, right? Because that's what you're doing. When you're saving, you're paying yourself. And so the more you can pay yourself, the more you're better. Like at the end of every month or every paycheck that you get, right? Ask yourself, how much do I want to pay myself, right? Instead of saying, how much do I save, right? It's just not as personal, right? So again, personal finance is more personal than just about the finances. So make it personal, right? How much do I want to pay myself? How much do I want to pay my my son and daughters, how much do I want to invest in their education? How much do I want to invest in our family vacation? How much do I want to, retire early because I hate my job or I hate my boss or whatever it is, right? Or how much do I want to pay off American Express because I hate those, those bleep whatever so much. But again, personalize it, and if you do that, it just makes it a lot better, or a lot easier to make it a part of your daily routine, right? And how you think of things. So, and again, there's great tools out there, and I think we'll go into that. But one thing I want to touch on real quick is this idea that people are so, they ask me like, oh, hey, I want to invest, I want to grow my wealth. Well, if we understand basically the formula of net worth is assets minus liability equals net worth. So assets minus liability equals net worth, right? So if I have liabilities, which is debt, and if I pay down my debt, right, so I can save more on my mortgage payment or so, when I reduce my liability, what happens to my net worth, right? Assets minus liability equals net worth. So if I reduce my liability, what happens to my net worth? It goes up. Right? So if I add more money to my 401k and keep my debt the same, what happens to my net worth? It goes up. So every time you save on a liability or on a debt, right, you're increasing your net worth. So just like I have a rental property in Anaheim, right? I paid off that rental property, and guess what? My net worth went up. So because I got rid of that debt, right? So So don't just think about the investment part, but think about the way you save, because the way you're saving, it's helping your bottom line as well too, right? So all right, let's move on. So growth, right? So wait, next slide. Sorry. Uh-oh, is my screen frozen? Oh, there it is. Okay, yeah. So let's. All right. So growth, right? So this is an exciting area. This is where you can get 1 and 2 done. The third thing is it's all about building assets, right? Retirement is all about building assets. It's not an age thing. It's nothing of that. It's about building assets or accumulating assets. The name of the game is how much assets do you have versus your liability, right? So let's define what an asset is and what a liability is. Simple, in layman's simple term, simple to understand is that an asset is an asset pays you, and a liability, you pay it, right? So if you have a lot of things that you pay into it, that's bad. But if you had a lot of things that it pays you, you're doing pretty good, right? So let's use an example, a car, right? Like my car. So I just recently paid off my car. So is my car an asset or a liability? Well, some say it would be an asset, right? Well, let's go through that. Does my car pay me? No, I pay it, right? Maintenance, I got to keep it running and all that good stuff. It doesn't pay me. It doesn't write me a check or pay me in any way. It's a liability, period. So let's just say I just purchased a home and I'm very happy with it. Now, is my house an asset or a liability? Well, does the house pay me? The home that I live in, does it pay me? No, matter of fact, I pay it. There are property taxes, insurance, and everything that I have to deal with the price of ownership, right? So that's a liability. Let's just say I've owned it outright, right? I have no mortgage on it. Is it an asset or liability? It's still a liability, right? Property tax, everything. I don't, right? Unless you lease it out and it's cash flow positive, netting after all your expenses, then it becomes an asset, right? But you get the point. So if you have a business that pays you, right, or some dividend generating asset investment, whatever it is, then that's an asset, right? So there we go. And by the way, I'm seeing some of these questions, and so I'll get to them at the end. But keep asking; it's good. I just saw the chat now, so I was able to turn it on. And here's the key that makes the world of difference that I've learned from my clients is it's not how much money that you're able to make or that you made from your money. The key is reinvesting, right? So that compounds everything. If I take my profits, the extra dividend or income that I'm getting, and I'm able to then reinvest it to make my asset grow even more or accumulate additional assets, then there you go, right? Then that means that instead of my timeline of, retiring at the age of 65, well, heck, I can retire at the age of 45, right? Or even earlier. And so so the day that you have enough assets that pay you, like let's just say you need about $50,000 a year net of taxes to enjoy your quality of life. And right now your assets pay you net of taxes $50,000. Well, you're done. You're out of the rat race, right? You're completely financially independent. You are retired. You are wealthy, right? And so, and that's something that's really, really important to understand. Oh, by the way, just as a fun fact, or just another question, do people know the difference between someone who's rich and someone who's wealthy, right? It's a question that the two words that people throw out a lot, like, hey, that person's really rich, and hey, this person's wealthy. What's the difference, right? Well, the difference is rich is measured by a dollar sign, right? It's by money, and wealth is measured by time. So when someone who's wealthy, they have a lot of time. So an average Joe in America is 1 or 2 paychecks away from bankruptcy. So that means so in measure of time, they're 1 to 2 paychecks wealthy, or to put it simply, most people get paid bi-weekly. So they're about a month or 2 months wealthy, right? That's how much time they have before they run out of money and get into financial trouble. But if you have all of your liabilities and all of your expenses paid for passively, like through your pension, your savings, and so on and so forth, right? Then you're permanently wealthy, right? You're done. You don't have to wait until you're whatever age that you're thinking about. As soon as you're able to do that, that's why I save 70% or probably more of what I make, because I want to reduce that time where I don't want to wait until I'm, at a much older age where I'm not as physically. I know I go on some, vacations and where I see a lot of older people. And I remember I had this conversation with this gentleman, and he said, like, yeah, he went on a big fishing trip. I was in Mexico, and he's like, yeah, we love doing this, but we're just old now. We wish we were as young as you, where you have more energy. But I told him, heck, at my age, I don't have your money, but I have a lot of, I have more, I'm I guess a lot more healthy or more physically, I can do more things, right? So it's just a matter of perspective. So anyways, but yeah, really important to keep in mind that you want to build wealth, right? So you want to be wealthy and not rich, because you can be the case that the richer you are, the less wealthy you become, because yes, you're making $200,000-300,000 a year, but you're also spending $200,000-300,000. So you're not wealthy at all. You're still living paycheck to paycheck, versus a person who only makes like $50,000 a year and they're saving, $20,000 a year, and they're able to compound that over time. They'll be better off, right? So that's why you have these, pick up the book, The Millionaire Next Door, or read about, about that. And yeah, it's a lot of normal people that are millionaires because they know how to save. So, and they know how to, build assets, and they take their growth and they reinvest it. So moving on, let's see here. So these are 3 main resources, and this will be emailed out, or it's going to be on the website. And during this time, this is the best resource that's out there. And I can do a screen share of that website in just a bit. But 10 suggestions to manage money in this time of crisis. It's amazing. It's very in-depth. They have every single tools and resources you can possibly imagine about everything that I just went over, about in addition to the government programs at the national level, to the local level, to how to build back your, it's all in one place. It's the most comprehensive one place resource you can find, and it's all free. It's absolutely amazing, and it's very comprehensive, and it's also very specific as well too. Another resource that is available is the Foundation for Financial Planning. It's something that, as a practitioner, as a certified financial planner myself, that we contribute to, and it is by far the best consumer resource for everything that deals with personal finance. So so take advantage of that website. There are great templates that you can download for budgeting, resources, it's all there. And the third thing, which is very unique, is that I'm part of the Orange County Financial Planning Association, and there are chapters all over the country. And a lot of these chapters, like I can speak to Orange County, you can book to work with a certified financial planner absolutely free. And I'm on this committee, and I'm a participant of that program. So we as a CFP community are donating our time to help those that are in need of to find a financial professional to connect with and work with. And there's no obligation. They cannot sell you anything or promote anything, or it's all, and you have to sign an agreement that you understand that, and they'll help you with a lot of the questions that you may have. But I can tell you, if you go to the website, let me see if I can share my screen real quick. Here, let me move it over. Where the 10 suggestions to manage your money in the time of crisis, it's all there. So let me do that right now. So the website looks like this. And so on here, look at this. Learn what are the national, they have it broken down to 10, like these 10 categories. Right? Learn what the national and the local government is providing in this time of crisis. Learn about possible hardship adjustments in financial and other contracts, right? So, if you click on this, they tell you very specifically about your mortgage to credit card to home, it's all here. And another important tool, to revisit, create a budget, right, to manage in this time of, it's all here. So, and then the other one is the consumer resources on the Foundation for Financial Planning. It's all, awesome resources. And of course, the Orange County chapter, where you can, book a time with a certified financial planner to help you and your family. So, and share these resources with friends, family. This idea of this webinar series is to be a public service. So, to get the information out there, so people are empowered, and they have resources they can go to, and so they're not being lost in the shuffle of the internet and all the craziness that's going on, or the misinformation that's out there. All right, so that's it. I'll turn it back to our moderators, and I guess we'll go to a Q&A session then. Let me get back to that. I'll stop sharing my screen.
Thank you, John.
My pleasure. Yep.
And I will go ahead and share. Okay, so you got it. I'm going to go ahead and share mine. Let's see. Oops. But before I have John jump into the questions, we'll give him a chance to look at the questions. I'm going to launch a poll, which I have to stop sharing to do. Oh, wait, no, I don't. There we go. Let's see. We'll figure this out.
Yeah, and we have about 15 minutes, so we'll do it.
Yeah, so John, if you want to go ahead and take a look at the questions, I'm just going to launch one other poll question so that we can, again, get a little bit more information. So let me see if you can go ahead and see that. Go ahead and put your answers in. Okay. Let me just give you a couple more seconds. All right, I've ended the poll, and I'll go ahead and share the results. So it looks like biggest concern from people saving enough for retirement comes in first, and then we're looking at not making enough money to cover expenses, and then the other one that tied with that, living paycheck to paycheck. Definitely the top concerns.
Got it. Yeah. So,
and then we have one more question. Well, you know what? I'll wait till the end for that. So I'm going to go ahead and stop sharing. And then John, let me
so I see some of the questions in the chat. So again, it's just understand my challenge as a working professional and not like a TV personality or radio personality is that they speak in terms of like, you can't give a clear answer. It's like you go to a doctor and you ask him like, hey, I heard about this medication. Should I be taking it, right? Because I don't know. I don't know what your your physical makeup is. Are you taking any other medication? Have you changed your dieting recently? Are you at risk of certain things? It's really hard, right? So I will stick to being very general. And these are questions that you should be asking your financial professional. And by the way, during this time, a lot of us, that's what we're doing. My office is very busy because we are being good. We're tasked with the responsibility to help our clients as much as possible, right? And during this time, this is really important to reach out to your financial professional because they should be trained, or if they're not just salespeople, I guess, is ask them these things, right? And if you don't like the answer, then ask another person or do your own research. But get, that's where your first. They should be, because they know your finances probably, obviously better than me, of course, because I don't know any about your personal. But engage your financial professional. Don't be shy about asking them. Seriously, they are available. I don't know why people think like, that this is not the time to engage those individuals, right? Yeah, they're available and they're more than happy to help you. So like the question about, one of them is about term life insurance. I have term insurance as well. And I also have a cash value life policy. So term insurance is great. I mean, so I don't have anything about it, but again, it's a financial product. And so if you use that product incorrectly, or you have a product that's too expensive, and how do you know something is good compared to what, right? So you really need to do, that's one thing that's interesting about the financial services industry is you don't have to be right. You just have to be first. And then that person will do something with you, or you're introduced to a product, you'll just do it because again, it's great compared to what. Really do your homework, and yeah, it's a product. It's like a credit card, right? Is cash back better than points, better than it's what are you trying to do, right? What are you trying to accomplish? And yeah, generally speaking, for most young professionals, I say term all the way. And term, there's great term life insurance there with living benefits. Look for those. Absolutely amazing, right? And shop around, because there are companies that are, there's like about very few in that category, but there's one or two that is really the best, right, for their price. So another one, that some of these other ones, when you go through the resources, they'll be able to answer your question. So let's see here. Again, tax implications. I don't know your tax implications or what it is. Check with your CPA, enrolled agent, or tax return, whoever you work with. They'll be more than happy to answer those questions for you. Yeah, and again, because we are in a state that is, taxed more than other states, then if you're able to invest outside of the state, then yeah. But again, what is the financial plan work? Because they will account for all of those little details, right? And then you take it, you add it all up, and then what's the total benefit of doing this versus that, right? All these variables, and yeah. So look at things comprehensively, right? So again, it's important to, right, the left hand needs to know what the right hand's doing and look at things from a holistic standpoint, and don't deal with things in isolation or just as one part, because that's where people get into trouble, because there'll be redundancies, or they're so focused on one area that they forget about, the other area. So let's see here. Oh yeah, so thing about okay, if there are people out there that are pushing, I hate when they start saying, oh, it's a section 7702 plan. It's basically life insurance, but you can use it as an investment. Run away from those people. One, they're not, I mean, good God, I am, insurance is insurance. What they're selling you is, look, what is it like, when you're a hammer, everything looks like a nail. They'll try to solve all your problems with insurance, right? Just like you talk to a real estate person, they'll tell you they'll solve all your illnesses by investing in real estate, right? You go to a stockbroker or someone who does stocks, or they'll tell you that, oh, put all your money in the market, look how much it's going up, right? Et cetera, et cetera. So these are very biased, or they're coming from a very narrow perspective, right? So be very careful. But yeah, I have issues with people that are promoting life insurance as a savings vehicle for your college education fund for your kids. Come on, like there are fees inside of it that even some of these insurance agent people don't know, and they don't understand. And by the way, this is a good time, again, to review if you have these policies, dig into them, ask questions. And if you approach the right person, they'll tell you, they'll explain to you how these things are built. They're loaded with fees and costs, and it's absolutely sad. And that's how they're able to get the high commissions that they're getting. And so be very careful. Yeah, so, and again, beyond that, really good time to do some tax planning too, because you can net a lot by, how you structure your taxes, right? Or are you getting a lot of what type of income you're getting, right? So are they tax advantage income, or they're not tax advantage income? Again, this is a great time to really review what you have, right? And start tagging, ask questions, do research. You will make money. I can guarantee you that you will net more because you can save more, right? And again, before, nobody cared. We had a rising tide. The market was up, everything was up. So a rising tide lift all boats and ships, right? Nobody cared. Everything was going up. They didn't look at, the risks they were taking. They didn't look at the fees that are in there, et cetera, et cetera. And so, they didn't know they were being taken. They don't care because their account was going up. Now, as the tide gets pulled back, they realize, oh my God, it stinks. There are all these other things, so really, really important this is a time to review it, right? If there's something you can do about it, do it. If you can't, move on, right? But at least know what's going on and don't make that mistake again. Again, just like I've learned from 2008, and I've been saving, and now is a great opportunity for me to really, put my capital to work, because before there wasn't as much opportunity as it is today, right? Especially in the market. There are things there are great funds that were very heavily discounted, and now they're back, more than 100%, right? So amazing. Let's see.
Hey, John, if you want to read the question, in case we have some people dialing in, if you want to read the question, or I can read the question for you out loud, that would be great.
Yeah, and I think we're like almost out of time too.
Yeah, we've got just maybe 2 minutes or time for one more
so
question.
The last one's like, I've been consistently saving 15% into 401k with employee match. So that's awesome. Obviously, the minimum you should be at least investing what your employer matches, right? So this person's doing beyond that. That's great. Ever since I started working, since the market is unstable right now, do I still recommend saving high amount of money into your 401k, or should I diversify my savings? So I don't understand to diversify your savings, because you should still be in the market, right? So when the market's down, you're just buying more shares. So the idea is you should continue to be invested in the market. Now, diversifying your savings, yes, look at other areas as well too. So I don't know the makeup of your 401k, what 401k investment options you have, right? If you have the ability to invest more into the tech sector or the sectors that are doing really well right now, obviously, the sectors that are not doing well, don't be allocating into those sectors, but reallocate into new sectors. But you want to continue to be putting more money in the market. Personally, for myself, I can tell you I'm investing more than I ever have, because the opportunity is even better, right? So you should be putting just as much, or in my opinion, even more, because things are discounted, right? So good things are discounted. So look for those. Some have gone back, the stock price have gone back to where it is. But yeah, look into, by the way, like just on that, diversifying your savings, look into opening up a Roth account as well too. So yes, and a non-Roth account, that goes with a 401k or a non-Roth option, and a Roth IRA as well too. You're able to get the same benefit of tax deferral, but it's tax-free at the end, but you don't get the benefit of tax deduction, right? So, but that's a good area where, look, taxes, I don't know about you, but I personally think that taxes are going to go up. I don't know how we're going to afford to pay with what we're down up to $12 trillion in stimulus that the government is putting out there. So they got to get that money back somehow, right? And guess how they're going to do that? Taxes and things that we're going to have to pay later. So if you can put money in some vehicle that are tax advantageous, look into those, right? And so especially a Roth account. Oh my gosh, everybody should be maxing out their Roth anything. Max it out as much as you can, period. And look into a health savings account as well too. That's another great saving vehicle that nobody really talks about as well too, an HSA account. Look into that. There's great websites that will tell you what it is. Yeah, so with that, and again, and some of these questions that are important, we'll save it for the next session. We'll design something around retirement planning because I think that's a big area. So being respectful of everybody's time. I know you have some things to share, Lynn, so we can end it there. Yeah.
Thank you so much. And just before we, let's see, I wanted to ask just the one more question, and this has to do with what topics you may be interested in learning more about next time. So I'm launching this. So if you wouldn't mind just taking a second and answer that. These webinars are designed to be dynamic and to evolve based on the needs and what everybody's interested in. And so if we didn't touch on certain topics that you are interested in this time, then absolutely let us know. And I'll go ahead and if I can ask my colleague Malem to type in, or Debbie to type in the Q&A, the email address, eipconnect@fullerton.edu, to let you all know there's an opportunity to provide feedback if we did not cover a topic. You will be receiving an email from us with the recording after this as well. But I'll go ahead and end the poll there and share the results. And so investing strategies obviously is the winner here, along with saving and budgeting. And so knowing what topics you want to see more of, then I absolutely would love to be able to cover those in the subsequent webinars. And so this is designed to happen every other week. And we have also another webinar, which will be on May 28th, called Recovering from the Economic Consequences of COVID-19. And it's designed to be a monthly webinar, and it's really higher level kind of market overview of what's happening. And then we will also have the continuation of this webinar series of Ask a Financial Professional on the dates that you see, and you can register via those links and we will also send out those links as well. And so we encourage you to join us again and ask questions. That's what this is for. And again, if we didn't cover what needed to be covered, let us know, because this is meant, as John mentioned, to be a public service. And with that, we thank John very much for his time, and we thank you for your time and spending it with us.